while the 66C resort on Indian Creek, which also does vacation rentals, is facing a potential foreclosure of $21 million. What's happening just a few blocks down here at Castle Beach at 5,445 Collins, in this building that's in exactly the same situation with vacation rentals? Does this mean that vacation rentals are doing well or doing badly? So in this video, we're going to take a complete look at what's happening from the 3rd of July to the 9th of July. Hello, I'm Fabrice Ernandes, a broker here in Miami. And let's take a look at what's happening in the market. Let's get a quick update. As we can see in this article from The Real Deal, the 6060 is just up here on 66th Street. So here, between 66th and 67th, this 6060 is at risk of foreclosure, as we can see, like I mentioned in this article from The Real Deal, for $21 million. Now, some might say, yes, but wait, the Castle Beach condominium and the 6060, which operates like a hotel, they are not the same either. That's true. It's absolutely true, completely true. However, the system is exactly the same, which raises the question, is the vacation rental market at risk of a downturn right now? Or has it even experienced a decline in recent years significant enough to cause a total bankruptcy, a foreclosure of $21 million? Let's take a look at the current status of this building. 31 properties in total listed this week, 18 floors, 571 apartments in total. So we have a complete idea. It's an old building, formerly a hotel, the former Playboy Hotel Castle Beach, converted into a mixed-use condominium. Vacation rental, meaning short-term rental, plus residential use. Here at Castle Beach, you have the option if you want to live in the building. It's completely allowed. However, it's in the same zone as the 6060. It depends on short-term rentals and the rather high fees that we now know about in older buildings, which we discussed in a video on our YouTube channel. So slightly higher fees and disputed management. That's also what happened at the 6060. So just like at the 6060, Castle Beach depends on good management and rental income. Therefore, owners, in order to cover the building's fees, depend on the profitability of the apartment, which maintain its stability. Be careful. There is a decrease in sales. We can see that there is a closing this week. Congratulations. There haven't been many closings over the past few years. In the last 2 years, there have been about 6 closings, no more. You can see this in the comparables, which is very, very few for a building that used to be so active. Of course, regarding this, we know and are familiar with the history. An offer was made by the developer. Then a second offer was made by the developer. The building was returned to, let's say, in quotes, normal activity after these 2 offers, following a refusal from the owners. Was it difficult to get things started again? Of course, the economy regarding the sales of apartments here at Castle Beach is affected by the drop in sales or, of course, a possible surge in fees, which could still happen. We know very well that older buildings can be subject to a special assessment. We also know that starting in January 2026, there would be a reserve fund that must be applied, adding additional charges. So this could create a domino effect and similar issues if management is not proactive. Proactive management is essential. So don't hesitate to reach out to professionals to get a sense of what to expect. Let's look at sales from the 3rd of July to the 9th of July. This is the 2025 update. An apartment was sold at 617. A studio with an ocean view, very beautiful apartment. It's a studio with 1 bathroom. Status changed the 8th of July. Sale price was $240,000, listed at $250,000. Closing completed, a $10,000 decrease from listing, which isn't significant. We're just below market price. Why? Before the pandemic, Castle Beach apartments cost between $240,000 and $260,000. The nicest even sold for $270,000 or $280,000. Now, let's just continue with this one. Studio square footage, price per square foot is $625. So here we're talking about square feet. So $625, which is actually the average at Castle Beach. We were between $650 and $750 per square foot on actual sales, on real value. This shows that there has been a drop in price, not catastrophic, but there is a decrease. And of course, the number of days on the market, 87 days for this studio. So the trend is that studios are struggling to maintain their value. Why? Because we overvalued them at a certain point when we were getting offers that were completely unreasonable. Should we have accepted those offers? Good question. We don't have a crystal ball, time will tell. So be very cautious if there's an increase in inventory here at Castle Beach. For now, we have 31 apartments, as you saw at the beginning of this presentation. Let's see if the number of listings increases here at Castle Beach, which would of course further decrease the value of the apartment. Now, let's talk about rental. Regarding rentals, there have been no new rentals. When I talk about rentals, I'm referring, of course, to annual rentals. Seasonal rentals are very, very difficult to manage. Of course, we should also take a look at the occupancy rate we have in the building, which is still significant even during the low season. Yes, guys, we're in the low season now. So June, July, August, September, October end, yet the building is still quite occupied. You can see some photos and videos we've taken. We have an occupancy rate here that's really, really quite good. So regarding, however, annual rentals are a bit paradoxical because property owners usually put their apartments up for annual rent here during the winter season, let's say during the summer months, which is actually the winter season in many other countries around the world. Here we are in the middle of summer, it's July. We still haven't listed any additional apartments for annual rent, which is really very, very strange, completely paradoxical compared to previous years. So is this a loss of profitability for investors? Why? Because the apartments keep going. It's completely, in fact, at Castle Beach, we're doing things completely the opposite of what's normal. If no apartments are available for annual rent, it means the trend for daily rentals is good. A point to watch. The silence in rentals and the drop in studio prices may seem trivial, but sometimes these are the first signs of a shift. The example of number 66 shows us just how quickly things can change. What I advise you, if you are an owner, is to keep an eye on your costs, monitor your expenses, and find out about the possible assessments you can have done. If you want to sell, don't hesitate to get the real value. We can provide a complete evaluation to anticipate resale value, even if resale isn't immediate, if it's something you're planning for the future. Investors look at trends over the past 3 months. That way, we already have something meaningful to go on. Not just from this week. I update this information every week. We can also summarize the data over the 3-month period. And if you are renting, make sure to properly structure your short-term strategy before winter. Winter here in Miami is much more profitable in this regard, since our returns in winter are truly incredible. So we can see here, could exactly the same thing happen at the 66 as at Castle Beach? No, the answer is no. Why? Because the 66 operates as a hotel. Castle Beach is a condominium with multiple owners, each managing their property individually. Some manage better than others, while some do less. This gives the building incredible profitability. You can judge for yourselves from the photos. Thank you guys for watching this video, and I'll see you next week. Bye.